Okay guys, so Cardano's ADA has fallen by 8.59% since Sunday. Okay, this has been a bit of an interesting kind of structure, and if we take a look back at the swing high of 86.43 cents back here on Monday the 12th of May, we are now down a nice 17.85% in that last kind of week or so. So that's basically from the 12th of May to the 19th of May. So within that 1 week period, 17.85% move to the downside. Now, since yesterday's low coming in down here at 71 cents, we have had a little bit of a relief, up 6.17%, and we are now kind of fighting off the 200 exponential moving average. Currently finding brief support on the 50 EMA, 50 SMA. However, I suspect we are not likely to hold, and we are in fact going to be moving down again. So let me go through why I think this. So here we have been tracking this impulsive move to the downside, the five-wave structure, the emotional roller coaster of a ride that we can see going on within the buying behaviors and selling behaviors within the price action. Now, we were looking for this move down here over the weekend. So we actually did see this on Saturday, which is the day that we did the last technical analysis video. We were looking for 71.66 to 72.84, and then we moved right the way back up. Obviously, I should have been putting out a video yesterday, but I was unwell, so I was unable to actually catch up with you guys and show you what was going on here. But we would have been looking at an additional low at this point. So as we can see, we did in fact move down again more aggressively. So far, we are playing, pretty much in line with the expectations, but we're not getting a major breakout. Let's go ahead and tidy this up a little bit, and I'm going to show you why everything is going on here. I'm just going to remove a lot of these lines so that we can actually see things a little bit clearer. Okay, so I'll get rid of this one as well. So in here, we can see that we were tracking this five-wave move, right? Now, we were hoping that it will complete, but unfortunately, that is not the case. Now, the reason that this is important is to understand the structures. Now, we still see the kind of corrective patterns going on here. So even though this is now quite an aggressive move, if I measure this Fibonacci level, this first move this over to here, you can see that this is very aggressive, right? It's heading down to the 1.618. However, it hasn't got the inner workings of what you would expect to see from kind of fearful kind of selling pressure that basically builds us up into those trend-based moves. Okay, so the behavior is very much something that we need to kind of keep an eye on. I'm going to actually remove a lot of this noise off of here, because although there is a five-wave move happening here, and I still believe that we are likely to get rejected from that 200 EMA, one of the key things that we can see from this price action is the overlapping nature of the candlesticks. Okay, and what that tells us is that behavior is it's not as clean as a lot of people might want you to believe it to be. Okay, let me go ahead and bring this over, right? So straight off the bat here, you can see that this is a previous area of support that has turned into resistance, right? It's quite an obvious area. And at the same time as this, we have the obvious kind of trend lines that can get drawn on. We have lower highs, and of course we have lower lows, right? But this is also something that I would say is kind of forming into a potential falling wedge pattern, depending on how you want to draw your trend lines. Okay, if we pull that in here, you can kind of see how this is kind of wedging down. Now, the overlap, which what I'm talking about, is when you have these swing lows down here, then you have a rally up, another move into a lower low, and then another move back up. You create overlap, right? When you're overlapping the previous swing lows like this, and you see it all the time, right? When you have these overlaps that are going on, there's this whole area right in the middle here where there's a lot of noise going on. Okay, that tells us it's not a clean trend to the downside. Okay, if we kind of take this into contrast, or in kind of relationship to what happened over here on the way to the upside, you had this move to the upside, you had this pull to the downside that didn't cross the lower swing low. Okay, we moved up, we moved down again, but we didn't create overlap between that first kind of swing high. So you have a higher high, and the relief or the kind of move to the downside, the little correction there doesn't overlap with the previous swing high. We then move up into a higher high, another move to the downside, and a correction does not cross over the previous swing high. Okay, we push up, and then we start to see this fourth wave overlapping. Okay, that means that there was one more push to the upside, more overlap, and then we can see this whole thing reversing, right? And so what we want to kind of understand here, we want should hopefully understand is that when you start seeing overlap, it means the trend is either come to an end or the trend or this correction is about to kind of go in the other direction, right? So we have a trend to the upside with no overlap, and then we started to overlap and we started then to go in the opposite direction, right? So the overlapping nature that we see here, and as we are coiling up, because you can see here, it starts off quite deep, quite aggressive, and then it starts coiling up and getting tighter and tighter and tighter. This tells us that we are likely to see a reversal to the upside. It just isn't going to happen right away. So we want to be aware that there is going to be a change of direction soon. Okay, we could use other tools for this outside of the candlesticks if we wanted to. I'm just using the trend lines to help try to depict this a little bit. We'll call it a falling wedge if you're into the pattern trading. You could use smart money concepts and say we're going to be looking for a break of structure, change of characterization, equilibrium, whatever it is that you're going to do. It doesn't really matter. It all kind of means the same thing. It just depends on your kind of how you kind of look at the market, what works best for your mind. But ultimately, a lot of these things, they actually mean exactly the same thing, whether it's support, resistance, whether it's Elliott wave, whether it's smart money concepts, doesn't really matter. They all kind of tell you the same thing, just different ways of articulating it. And so what we have going on here is the overlapping candlesticks, the falling wedge pattern, right? This is in line with this 5-wave move, which is a trend to the upside. Okay, so you have your trend going to the upside here. Okay, you then have your correction coming down. The correction to the downside is not a trend based on the fact that we have overlapping candlesticks going on, although I suspect we haven't yet finished. And if we were to reflect on everything that is going on, we can find previous resistance down here. And I'm going to draw this in. I'll draw it in relatively broadly to give you an idea. You can see right inside here, previous resistance, we broke out of it, we'll move back down. This is now going to turn into support, okay? And it's still possible that we move down a little bit deeper. For example, we could be looking at this entire low over here, and we could be looking at that high there. It gives you a very broad range between 66.47 and 74.6. It's not great for trading short-term moves, but great if you're going to be zooming this out into a daily time frame and saying, okay, well, this seems to be a great place to be loading into our kind of long positions. The other way of looking at this, of course, is using Elliott wave, and Elliott wave works with your Fibonacci retracement. So here you can see, and this actually beautifully works really well actually, because a wave 2 would retrace between 50 on the fib scale and 88.2 on the fib scale. And you can see that this yellow box area that I drew in, based on the swing high that we had over here and the swing low that we had over here, happens to coincide with 50 and 88.2%. Okay, so that area of consolidation, that previous area of rejection before we got the breakout, happens to fall in line with the length of this entire breakout. And the retracement is exactly the previous area of resistance that can turn to support between 88.2 and 50% retracement area. And this is why I say that Elliott wave, Fibonacci's, smart money concepts, support resistances, pattern trading, they're all kind of the same thing. It's all just depends on how it kind of works in your mind. I like Elliott wave because I like the psychology of it all, and the rules kind of just make sense. It's black and white. There's no emotional involvement in it. There's no misunderstanding. Just apply the rules as they are, and it works out really well. So here we can see on this 1 hour time frame that Cardano's ADA still has the potential to go down deeper. I would not expect the price action to go down lower than the previous swing low of 64.26 cents. And we are right inside the range of where we might think about accumulating. Okay, let's take a look at some indicators then. What do we see here? Well, we have a stochastic RSI. This is a momentum oscillator. Basically, it does not represent price action. A lot of people misunderstand that. It doesn't represent price action, but it shows you the strength on the momentum behind the price action. Okay, so the candlesticks here moving upwards, you can see that the stochastic RSI rapidly moved from oversold to overbought. Okay, whilst the price action did a pretty small move, what did I say it was, like 6%? So 6.17%. The stochastic goes from oversold to overbought, right? So we know that this move here didn't have a lot of strength in it and therefore wasn't likely to continue a breakout to the upside. It's overbought. As we hit these resistances, likely to see a move to the downside. If the stochastic RSI is slow moving, okay, as you can generally find this side over here, for example, you can see that it broke out into a higher high before it hit the overbought area. Okay, this is an indication that actually there was strength to the move to the upside. And then we rapidly corrected down to the oversold area without doing too much price damage. And then we can start this continue this rally to the upside. Okay. So you have to kind of think of momentum not as relating to price itself, but to whether or not buyers are buying in at kind of volume, or whether or not sellers are taking control of the situation. Okay, the speed in which the stochastic RSI moves is more important than anything else. Okay, now obviously the stochastic RSI is 2 steps removed from the price action. It is a stochastic variation of the relative strength index. The relative strength index is 1 step removed from the price action. This basically means that the RSI is less sensitive. The stochastic RSI is more sensitive, but at the same time, it's 2 steps removed. So it's completely isolated by 2 steps from the price action. Okay, and so it gives us some clues, but we don't trade directly on the stochastic RSI. Very important, we don't do that. The relative strength index we can use as a divergence indicator as well. So here we have the RSI, it's above the 50 level. It's actually in bullish territory here. Whether it'll hold is going to be the interesting thing. We haven't got any divergences, bearish, hidden bearish, bullish, or hidden bullish at this point in time, as we find support here on the hourly 50 EMA and 50 SMAs. Resistance is still going to be looking at that 200 EMA, so I suspect we are likely to see a pullback here, probably lower than the 50 level on the RSI. So it's an interesting spot, but we can't really draw terribly too many conclusions from it. The MACD here, I actually removed the lines. I don't like the actual averages of the MACD because they only show you what's already happened in the price action. I've already got EMAs on here anyway. But the histogram gives us a visual representation of what the stochastic RSI and the relative strength index try to do, but they give us it in green bars. So actually, this could be quite useful when we kind of take a look at the price action. So we can spot divergences. Is there weakness within the price action that you can't really see from the candlesticks, but you could see from volume profiles or from kind of momentum oscillators? And so what we can see here is actually there is, in fact, some bearish divergence, right? So we have a higher high on the price action right there. And whilst we have the higher high, we have lower highs here on this MACD histogram. This shows that there's a higher probability that we're likely to get rejected from here. Okay, so not only does the stochastic RSI say that we're heavily overbought, coming up to resistances of the 50 EMA, but we can also see that the histogram is weakening as we have a higher high in price action, indicating that we are more than likely going to be looking for a retracement. So to kind of get into the start of this video where I was expecting us to go down again, that is my expectation. My expectation is that we get rejected here and we move down a little bit. And if I were to trade this, how would I be looking to trade it? I could be looking to go short. I'd be looking at a new lower low on the hourly time frame. So I'd just drop this a little bit lower, and I'm going to put the stop loss just above the previous swing high over here, because I'm not expecting a higher high in price action, or above the 200 EMA there. So a 1.62 risk reward ratio would basically be how I would look to do this. So entry roughly around 74.39, stop loss 76.73, take profit would be 70.59. Okay, of course, this is just a rough idea at the point of recording. Things can change. I'm recording this at 05:44 UTC, and this video actually goes live, I think, about 8 a.m. UTC. So, we're just about 2 and a bit hours ahead of time here. So, this may change a little bit, but this is where my mind is at the point of recording. If I am to actually be trading it, I'm going to be communicating this down in our Discord server. There's a link in the description down below if you are interested in joining a free community, right? So go ahead and check it out. Link is in the description down below. So this is my thought process. And we are really getting quite close to a breakout, I think, for ADA. Again, it's just going to take some time. If we roll this up into a daily time frame, then on the daily time frame here, we can see that there is still a long way to go, right? So our initial kind of thought process, in terms of what we've scoped out before, right? We have the accumulative areas that we had before. Okay, so in 2022, we were talking about 22-cent ADA. That's down here. I actually called it in 2023, thinking that we probably had actually finished late 2022 at 23 cent, because I thought maybe I was a bit too optimistic, when we're up here at $1.20 or whatever, and I'm calling for 20 cent, 22 cent. People are kind of calling me all sorts of different names under the sun, right? And Well, I kind of saw this low down here and thought, okay, we might as well call it. There's a high probability that I was just off a little bit. And yeah, we got 23 cent. And then actually coming along 2023 and we actually hit the 22 cent on the nose down over here. So we got there eventually. It just took a little bit longer than my initial expectations. Anyway, long story short, we had these two accumulative areas afterwards, right? So we had the reversal from 22 cent up into the distribution, the first distribution. We then come down into the first accumulation area, this one right down here. This was 23.46 to 28.87. We then go up into the second distribution event, that is 57.38 to 85.52. Then down into the last major accumulative area that I was talking about, which was 27.49 to 42.19. Back here, I was basically saying anything lower than 42 cents, dollar cost average into it, and we're going to got the breakout for the third distribution coming in at $1.01 to $1.37. We topped out at 132, and now we're in this next area of accumulation. Now, I was on the last video saying that the 27.25 cents to 53.95 cents, we've tapped it twice already, and I think there's a low probability now of coming back to it. Now, unlike the previous two, where we spent a fair bit of time in the accumulation ranges, this one I'm not as confident on. This one's looking likely to see a retracement, but not back into this area. And I think we're going to be then kind of leaving it behind. And that's quite unfortunate because we've only really spent a couple of hours down here in these kind of 2 wicks on the daily time frame. Not a huge amount of time to accumulate lower than 54 cents. So it's one of those. I'm not expecting us to kind of spend a lot of time coming back down into these lower ranges. We're now cleanly above the 200 daily EMA, which the last time that we broke out above the 200 EMA, we did not revisit these cumulative ranges. Right, on both of these occasions, once we broke the 200 EMA on the daily time frame, we didn't come back down. The same thing over here. Once we were in this accumulative range, once we broke the 200 daily EMA, we didn't come back down. Now we've spent some time down here, right? We did break the 200 EMA once. We came back down into a higher low within the accumulative range, and now we've broken back above the 200 EMA. It's possible to come down. I just think there's a lower probability of it now. So I think for us, we need to be really kind of focusing in on what's going on the smaller time frames and to see whether or not there is the possibility of this break to the downside. But ultimately for Cardano, it's looking a lot more positive in my humble opinion. Now, as I zoom out of this, we are still tracking some pretty decent highs. None of that's really changed at this stage. On my kind of conservative side, we are looking for $3.09. So basically a double top with the previous all-time high, and then up to about $4.77 on the conservative side. On the kind of more maybe hopium and optimistic side, we're talking about somewhere between $5.27 and $12.91. And then we've got pure moon boy math at $38, right? So there's a lot of stuff that's potentially going on here. I'm going to be, conservative until proven otherwise. So we are going to be talking really about kind of topping out at around $5. But, there's still the possibility that things change. At the moment, our C wave pattern here, okay, the C wave structure for Elliott wave is tracking a diagonal based pattern, which is one of the formations that could only possibly be inside the C wave. So we have the 5-wave trend from the A wave for 2020 into 2021. And then we have the 2023 low into a diagonal pattern. Diagonal patterns are very, very rough for retail investors anyway, because they have pumps and dumps all over the place. It's basically a string of 5 3-wave patterns, and 3-wave patterns basically have 2 up, 1 down. You multiply that by 5, you can just see this market's going to be bouncing around all over the place. Whereas here we have 3 up and 2 down in your kind of trend-based 5-wave pattern. So you can see that there's going to be a vast difference in how the market behaves. Anyway, nonetheless, everything is still very much on track. So I think that's going to wrap today's video. If you found it useful, informative, smash the like button. If you're new, subscribe, and don't forget to join us in the free Discord, and I'll catch you all in the next one.